So guys, we have officially made our way into the month of May, which means that it's time for another dividend portfolio update. And for the second month in a row, we are seeing some pretty steep declines in the portfolio. At any rate, in this video, I'm going to show you everything like my best and worst performing stocks of the month, all my recent moves in the portfolio, which I just added a new dividend stock, so we'll talk about that, and we'll discuss what my upcoming plans are here in May. But before we get to that, guys, I want to hear from you. Leave me a comment below and let me know what's been going on in your portfolio this last month. Were you up? Were you down? Did you hit any crazy milestones in your portfolio? Anything cool that happened to you guys in this last month? I want to hear all about it in the comments below. Anyway, guys, getting into how my portfolio performed this last month over here on my dividend portfolio tracking spreadsheet, which you can start using for free. There is a link to download this spreadsheet in the description of the video. But starting here just with my main taxable brokerage account over on Charles Schwab, as we can see, it is currently valued at $76,878.52. And every single year, this account is bringing in $2,938 of dividend income. And going back to the account's current value for just a second, guys, this number right here is up about $900 or so compared to this time last month, which sounds good, but it would have been down a lot, guys. Like, we're talking multiple thousands of dollars if I didn't contribute so much more than usual to this account in the last month. And if we look at the breakdown of my returns over here on Snowball Analytics, which is another very cool portfolio tracker that I highly recommend you guys check out, especially if you're not a spreadsheet person, or if you're looking for something with more bells and whistles than your standard spreadsheet. I think Snowball Analytics is the best portfolio tracker out there that you can use. And the cool thing is you can actually check out Snowball Analytics for free. In the description of the video and in the pinned comment, there's a link to try it out with a 14-day free trial, and I highly recommend you do so. I think you're really gonna like this platform. But guys, back to the returns here. April was by far my worst performing month in the last year, really, over these last 12 months. As we can see, I was down 5.1%, so a very big drop, and my biggest drop since December of this last year, where I was down 4.5%. So April definitely took the cake. And if we just look at the breakdown of these returns, we can see, kind of like I was saying earlier, I was down a lot in terms of capital gains. I was down $4,382, and I invested in total $3,600 throughout the month. So like I said, that really saved the portfolio value. And on the dividend side of things, it was actually a pretty solid month of income. In total throughout the month, I received almost $282, which for me is an above average month. And with that, guys, if we scroll up just a little bit and compare the returns of my portfolio against those of the S&P 500, the NASDAQ, and SCHD, in the month of April, both the S&P and NASDAQ actually crushed my portfolio for the first time in a long time. I feel like pretty much all year my portfolio has been seeing higher returns than all the indices on a month-to-month basis when we do these portfolio updates. But not this month, guys. The S&P beat me by 5%. The NASDAQ crushed me by 7.3%, but we still outperformed SCHD here to the tune of about 3%, so it could be worse. And with that, if we zoom out looking at the year-to-date performance so far here in 2025, we do have the edge. We're still holding on to the lead. We're outperforming the S&P by 2.6%, the NASDAQ by about 4%, and SCHD by 4.25%. So things are still looking pretty good so far for the year. And if we zoom out looking at the performance over the last 365 days, it's a bit mixed here. We're barely outperforming the S&P by less than 1%. Looks like the NASDAQ's beating us by 0.6%, and we're absolutely destroying SCHD by 9.2% here. So overall, guys, we've definitely had better months out there, but it's all good. And as I'm sure you can imagine, there were quite a handful of stocks in my portfolio that saw some pretty steep declines, and that's what we're going to take a look at next. Now, believe it or not, guys, I actually didn't have any stocks in this last month that saw some positive share price performance for the first time, I think, ever in this video series. Since I started documenting the growth of my portfolio here on YouTube, this has never happened, but it's true. Not a single stock in my portfolio saw any gains. So that just leaves us looking at my worst performers for the month, with the top dog, my biggest loser, being Chevron, who was down at 12.8% just in the last 30 days, a very big drop for Chevron. And that's going to leave the stock down about 5.7% so far in 2025. And we can see that it really fell off a cliff right here heading into the month of April. And from what I can see, the only reason that Chevron has struggled so much in the last month is because crude oil prices have pretty much fallen off a cliff. And since a huge chunk of Chevron's profits comes from selling oil, that could have a negative impact on their earnings and free cash flow. So these potentially lower profits are just being priced in. But anyway, moving on to my second worst performing stock for the month, we're sticking to the energy sector, guys. This one was Enterprise Products Partners, who was down 8.8% in the last month. They're down for the same reasons as Chevron, and this is despite putting up some solid quarterly earnings where they beat on revenue and increased their distributable cash flow by 5% year over year, which is pretty solid, while at the same time also raising their dividend by almost 4%. So in my opinion, EPD could be doing worse. But anyway, looking at the year-to-date performance, this is going to leave EPD down 4.4%. So not a crazy drop here in 2025. And with the share price sitting at around, $30 per share, I think it's looking pretty good. Actually, yesterday, it was below $30 per share. And I think it's looking really nice. I may have to start swooping up some more shares of EPD. It's been a long time since I've added any more to this position, but I would love the opportunity to do so. I think this is a really solid company. It's a great dividend payer, and I would not mind building up this position a bit more. But anyway, moving on to my third worst performing stock. This one's probably not going to come as much of a surprise to you guys. This one is Starbucks, who's down 6.6% in the last 30 days. And looks like they're rebounding quite well today. They're up 2.3%. And just looking at the chart here, there was a brief blip where Starbucks touched, sub $80 per share. Not a bad price. But anyway, if we zoom out looking at the year-to-date performance here, this is going to leave Starbucks in the red by quite a bit, down almost 9%. And the drop for this stock, I think, is mostly earnings related. I mean, there's some tariff stuff, there's some macroeconomic stuff in there as well. But earlier this week, Starbucks reported their second quarter earnings for the year, and the numbers sucked. There's no other way to say it, guys. The earnings per share dropped 38% year over year. Operating margin fell to 8.2%, and same-store sales around the world were down 1%. So not great, but with that said, even though the numbers were terrible, believe it or not, it does sound like some good things are percolating under the hood that suggests Starbucks might be heading in a better direction. I think we'll just need some more time to see how their whole back to Starbucks plan plays out. In the meantime, though, guys, as much as I love this company, I will say I am a bit concerned about the payout ratio. For the quarter, it is above 100%. Which is a bit scary, and that's definitely something I'm going to be keeping an eye on moving forward. All right, guys, now getting into all of my buys and sells for the month, I picked up a few different individual companies, the first of which was Johnson & Johnson. I just nibbled a little bit more into this one. I picked up 3/4 of a share at an average cost of $157 flat. Moving on, I also, for the first time in a long time, added to Blue Owl Capital Corporation. In the month of April, I picked up 14 shares at an average cost of $13.10, and it felt good buying it, guys. I actually wouldn't mind buying some more of this stock. Like I said, it's been a long, long time. But then that brings us to the third stock, and you guys will know about this one. This one was Zoetis, which is the newest position in my portfolio. I just started it a couple weeks ago, and so far I have 23.47 shares at an average cost of $150.12. And this is what the position is looking like for me so far. We already established the number of shares and the average cost per share, but so far we're seeing a pretty nice gain. I'm already up about 4.5% on the position, and it's already, kind of a middle of the road position for me, and I look forward to building this up even more. But anyway, those were just the buys in my taxable account, and moving over to my Roth IRA, I dollar cost averaged into both SCHD and VOO every single week and went heavy on SCHD in April, guys. I added almost 20 shares to my position and picked up these shares at a pretty solid price of $25.54. And I nibbled a little bit more into VOO, definitely not as much as SCHD this last month, but I still picked up 1/3 of a share at an average cost of $477.21. So overall, I'd say it was a very successful month of buying. And this month in May, really my sole focus is going to be on building out my Zoetis position, at least in the taxable account. In the Roth IRA, as you guys know, we'll still be adding to SCHD and VOO every week. And with that, my friends, now moving on, taking a closer look at my Roth IRA. Here we can see it is currently valued at $16,575, which is up quite a bit compared to this time last month. We added about $350 in total compared to where we were at the start of April. And every single year, this account is bringing in $481 of dividends, which breaks down officially to $40 every single month. And with that, guys, looking at my Roth IRA's returns over this last month, like the taxable, this one was down. It was actually down a bit more, down 4%. So we were down almost $700 in the account, which means that the gains that we saw in the account's value strictly came just from my contributions. And with that, on a year-to-date basis, we are still down in this account, down a little bit more than in the taxable. We're down 3.25%, but still nothing too crazy. And now if we take my main taxable brokerage account, which is valued at $76,868 and is bringing in $2,939 of dividend income, and add that to the $16,575 Roth IRA that's bringing in $481 of income, that's going to bring my combined portfolio value to $93,443 and my annual dividend income to $3,420. Which, if we look at the month-over-month gain in income, we saw a pretty big jump, guys. The projected annual income today represents a $99 increase compared to this time last month. So we definitely saw a nice boost from all of this month's contributions. And if we look at this on a year-to-date basis, so far in 2025, I've added $356 of projected annual income. We started out the year at $3,064, and now we are less than $200 away from reaching my main dividend income goal for the year of hitting, $3,600 in projected annual income. At this point, guys, I'm like 113% sure we're gonna hit it, which is so cool. I actually think it's possible by the end of the year I could hit $3,700 in projected annual income, maybe even $3,800, but we'll see how the rest of the year goes. I don't want to get too overconfident and get too ahead of my skis, but at the end of the day, I'm pretty stoked with the progress we're making so far, so I'll just leave it there. Now guys, as far as my watch list goes, I didn't make any changes to this list in the last month. No new additions, no removals from this list, but it does look like Rexford Industrial Realty, ticker symbol REXR, is officially in buying range. I set a target price for the stock of $35 per share, and it's now about 5.25% below that. But does that mean that I'm going to now add Rexford to my portfolio? Not necessarily. Right now, like I said a few moments ago, all of my focus is going toward building out my Zoetis position. But when it comes to Rexford, it's definitely a stock that I'm still keeping an eye on. If you're in the market for a solid real estate investment trust that not only has a high yield, but also a pretty killer dividend growth rate, at today's prices, I do think Rexford looks like a pretty decent buying opportunity. I'm telling you more about that in this next video right over here. In this one, I'm breaking down why Rexford made its way onto my list of top dividend stocks to buy in the month of May, and I'm also telling you about 2 other killer dividend stocks that I also think are worth considering. But anyway, click right over here to check those out, and I'll see you in the next one.